Hiya, I wanted to talk about the different types of business structure and the reasons why you might pick one over another. So the two main different types is a limited company and an unincorporated business. So an unincorporated business is typically referred to as a self-employed person, a sole trader, or if there's more than one person, it can be a partnership. So we'll start with a limited company. So we do get asked by clients, particularly new clients, quite a lot, should I go limited? Should I start as a sole trader? Generally, there's three reasons why you might want to go limited. Number one, and it's not quite as big nowadays as it used to be, but it's potential tax savings. So if you're a limited company previously, we could say this is the figure profit-wise for you to earn to make it worthwhile financially for tax reasons to go limited. There's been some changes from the taxman in the last few years, particularly around dividends, that's lessened the tax saving, the significance, but there can still be some tax savings from being limited, so that's one reason. The other reason is protection. So if you're a limited company, you're a separate legal entity to an individual. The protection is not quite as big as it might seem because, for things like finance, you'll find with banks, they often ask you to sign a personal guarantee anyway. So if you don't pay off your debts, often you have to support that on a personal level, although that there can be extra protection with organisations like HMRC, for example. You've got more protection over your house and your assets if you are a limited company. It doesn't mean you shouldn't ignore all of the insurances out there, because there are some really good insurances, whether you're limited or not, that help to reduce that risk. And thirdly, it can be a status thing, not necessarily for everybody. Mr. Joe Blogs up the road doesn't tend to care if you're a limited company or not, but some businesses, particularly the corporate businesses or business to business, they often prefer dealing with a limited company. There's just more of a track record, and they can search on company's house, so there's more information available publicly, and it gives them a little bit more confidence that you are an established business. It's not for everybody. If you'll say a hairdresser, for example, you deal with the public, I don't think it makes any difference really whether you're limited or not. So that's the three main reasons. The negative to being limited is the cost, because there is more red tape. There's a lot more to do. So there's a lot more services included. For us, for example, maintaining the limited company client compared to a self-employed client. So that is one negative, and there's lots more red tape coming around the corner and lots more rules there seems to be for limited companies. In terms of a sole trader, some of the perks and where we think it is a good option is generally for really small businesses, definitely turnover less than 10k, probably less than 20k, potentially even 30. Then the sole trader seems to make sense from a financial and cost perspective. It's also easier for your bookkeeping. So if you're a sole trader, you've got less requirements, and it's a lot easier to do your own bookkeeping if you're a sole trader, because there is less to go wrong than if you're a limited company. And costs. So as I mentioned, our fees, because it's easier to look after, the costs are a lot lower if we're looking after a self-employed or a partnership client compared to a limited company. So if you've got any questions, feel free to comment or send us an email. Thanks.